And you are watching CNBC TV 18.
Hello and welcome to Net Worth. The Indian markets this week continued to be in the green, giving some signs of respite. But on Net Worth this week, we will guide you about some investment strategies that can help you safeguard and enhance your net worth. Let's see what our team has got for you. In times of distress, many people turn to God. Sharia-compliant funds, an interest-free alternative to regular funds, seems to have ironically gained the interest of investors. But what's the secret recipe for this one? Abhi Raja joins us to give the divine answer.
Thanks for that, Priyal. First of all, let's understand what does a Sharia-compliant fund really mean. Sharia refers to a code of law or divine injunctions that regulate the conduct of human beings in their individual and collective lives. This is the philosophy that comes into force for investments. There are certain rules which need to be followed so that a fund can be called a Sharia-compliant fund. First of all, investments cannot be made in a company whose total debt is 1/4 of its total assets, and also in companies whose interest income exceeds 3% of its total revenues. Apart from this, a Sharia-compliant fund cannot acquire shares of a company that provides financial services on interest, like conventional banks and insurance companies, as well as companies that manufacture or sell liquor, pork, tobacco, or are involved in gambling, nightclub activities, pornography, etc. And anyone who stands by this philosophy can use this investment avenue.
There are a lot of customers who would want to invest based on their, I would say, personal belief. There are customers who would want to do a socially responsible investments and for the sake of diversity, defensive sectors and so on. So for these kind of customers, there are further options available in the market now, which are these kind of funds which are offered internationally in India also.
S&P has also launched two major indices in the Indian market, the S&P CNX 500 Sharia and the S&P CNX Nifty Sharia. The Sharia index has 37 out of 50 companies on the Nifty index. Experts say these restrictions do not compromise returns.
We did some back testing and when we went out with our sample study, a lot of the investors were worried that we were compromising on returns by layering all these criteria and filters. And the backtesting results showed that over a market cycle, you actually end up at the same place as the broader benchmark indices like a Nifty or a CNX mid-cap. Well, we looked at how the Sharia index in India has done, which was incepted in December 2006. So from December 2006 until February, the broader indices had lost about 35%, and the Sharia indices had also lost about 35%. Now there might be bouts or brief periods of outperformance and underperformance, but more or less.
With that, we have come to the end of this week of Net Worth, but we will continue to guide you to build your net worth. Do send us your feedback. Thank you for watching and happy investing.